Hey guys, welcome back to High Yield Intraday Trading. I hope every one of you is doing good. So before we start discussing today's topic, let me request you all to subscribe to my YouTube channel by clicking on the subscribe button here. Once you click on it, you will get the confirmation on the left bottom corner. Post you subscribe to my channel, also make sure to press the bell icon and click on all. You will get the confirmation on the left bottom corner so that whenever I upload a video, you get the notification about the same without any misses. Also, I would request you all to subscribe to my Telegram channel with the name HYIT Intraday Calls because I share a lot of things over there and it might be helpful to you in some way or the other. Very good afternoon, guys. So today is 8th of July 2021, and I got some time to go ahead and record a live trade for you. So let's get on to the video, and post the video, we will jump onto the charts, and there I will explain you what was my thought process of taking up the trades, where I took the entry, where I exited, why I did it so, and stuff like that. Okay, so let's get on to the video here. All right, so let me play it from the starting. So I'm logging in to my Astha mobile application, and we will get on to the trade book here, to the order book here. All right. So let me pause the video here. So as you can see here, today two trades were taken up. Actually, three trades were taken up. The scripts were Just Dial and IGL. So when it comes to Just Dial, I took up a buy trade, and the second trade was a sell trade, and IGL was a buy trade. Okay, so these are the exact price points where I took the entries and the exits. Okay, and then we get on to the all tab. Okay, so let me play the video here. All tab. Okay, it's not coming up. I'm not sure why. Oh, it directly took us to the net position. Okay, let me bring you back for some time. Okay, just a moment. Okay, so this is the order book, and I just explained what all trades were being taken. Now you see a number difference here, right? In completed tab we have 6, and in the all tab we have 8. Now, let me give you a quick reason for that. Now, I was trying to take up another IGL trade in the buy side. Okay, I was trying to increase my position. So let's say, for example, I traded with 350 quantity in IGL. I was trying to increase it to another 200 quantity. Okay, but it did not take up the trade because the capital was not high enough. So I tried twice and it rejected my request twice. That is the reason why we have the number 8 under the all tab. Okay, just wanted to clear that. Okay, let me play the video here, and let's get on to the net position tab, wherein you will see what is the overall profit or loss that we have made today. Okay, that I have made today. I'm sorry about that. All right. Okay, let me pause the video here. So today's profit, as you can see here, in IGL, I earned around 775 paise, 775 rupees 90 paise, and in Just Dial, I earned around 1980 rupees. Okay, so the total comes up to around 2755 rupees 90 paise. Okay, now let me go ahead and summarize the video. So the total capital that was deployed for today was 45,000. Okay, and the profit that we have made, let's round it up to 2700. So the return that I got was around 5.5% to 6% of my capital. Okay, so again I proved the point that even if you have a small capital of around 40,000 to 50,000 rupees, you can surely earn 4 to 5% of whatever capital you have every single day. Okay, so again, just to repeat, the capital that was deployed today was 45,000. Profit made was around 2,700. So the return that we got for today was around 5.5% to 6% of the total capital. Okay, now let me play the video and let it finish by itself. I've just refreshed it and the video ends here. Okay, right. So the video ends here. Let me pause it and let's get on to the most important thing, that is the chart. Okay, so let me go ahead and explain why the trades were taken, where they were taken, and stuff like that. Okay, so so on the left hand side you see the 15 minutes chart for Just Dial, and on the right hand side you see the 15 minutes chart for IGL. Okay, these are the two scripts that I traded today. So talking about Just Dial, now since the starting of the day, let's round it up to 1000. Okay, so since the starting of the day, this guy Just Dial, it went from 1000 rupees to 1054 rupees. A 54 rupees move in the upward direction without a single red candle. That is the first point that you need to note here. Okay, so where did I take the entry? I took the entry at the 10 o'clock candle. That is this candle. Okay, now if I talk about today's market, what was being seen in today's market was, in the first half, at least till around 12:30 or 12:45, the market was struggling. Okay, the bears and the bulls were in a real fight. Okay, as a result of which there were very few scripts that were giving the moves. That was about the first half. In the second half, we saw that the bears took over and the market started falling. Now, the thing that I'm trying to portray here is that I am not talking about Nifty. Please remember that, okay? When it comes to my technical analysis, or when it comes to my script selection, my stock selection, I never ever refer the Nifty charts. I only refer the charts of a particular stock. So if I want to trade in Just Dial, I just have a look on the Just Dial chart. If I want to trade on IGL, I just have a look on the IGL chart. I don't care what Nifty is doing at that time. Let me make it very clear. Okay, so coming back to my entry. So my entry was at the 10:01 a.m. This is that would be this candle. Okay, now why did I take the entry? Again, the same old stuff. The 9:45 candle was the candle which actually breached R3 and closed above it. That tells you that Just Dial has more strength to go up further. Now, before you actually decide to take up that particular trade, what is more important is to look towards the left hand side of the chart. Okay, so the 9:45 candle ended. The 9:45 candle will end at 10 a.m., right? So what happened before 10 a.m.? Since 9:15 till 10 a.m., that is for 45 minutes, this guy kept moving up. Unstoppable it was. Without a single red candle, it kept moving up. So when you decide to take an entry at the 10 o'clock candle, it becomes more riskier for you, because since 9:15 this guy had been moving up, and it is a 1000 rupees script. Okay, so from 1000, it is 999. Let's wrap it up, or let's round it up to 1000. So from 1000 rupees to 1041, it has already given you a 41 rupees move. So when you have decided to take a buy entry at 10 o'clock candle, you are actually taking a risk. Though the technicals are matching, though everything looks p perfect, but still it is a risk, because prior to that, prior to 10 o'clock, everything is in green. So as a day trader, what is the best thing that you should be doing? Option one is you should not be taking up the trade. Option two is you need to take care of some very basic things. Which option will you go with? Now, if I talk about option one, that is not taking up the trade, I won't prefer doing that, because if you are a trader, you need to know what you are doing and you have to take up the trade if you want to earn money. Okay, now since the technicals are matching, since everything looks to be perfect, I don't see a reason why I should not take up the trade. But what is the point that is stopping me? Or what is the riskiest thing that I can see on the charts? The riskiest thing that I see on the chart are these three solid green candles. Okay, so which tells me that if I take an entry at the 10 o'clock candle, it might start moving down from that point. Okay, but as I said, as a trader, since the technicals are matching, you should take up the trade. Now, what is the thing that you need to take care of? The thing that you need to take care of is your exit. Okay, your target. So this is a 1000 rupees script. And as I always suggest, for a 1000 rupees script, I always target for a 1% move. So 1% of 1000 is a 10 rupees move, right? So if I'm entering at 1040, I expect to have a target of around 1049 or 1050 rupees. Okay, that is the by default thing that I follow. Now, in this scenario, will it be good enough if I stick back, or if I'm rigid on the fact that since I'm taking an entry at 1044, I will stay back till 1054 or 1053, then only I'll come out of the trade? The answer is no. As a day trader, you cannot be rigid. As a day trader, you should always be flexible, especially in these kind of scenarios wherein you see so many green candles right from the starting of the day, and still if you are taking a long entry, make sure to reduce your profits. If you are aiming for a 1% move, aim for a 0.5% move, which is nothing but 5 rupees. So if basically for a 1000 rupees script, you will be aiming for a 10 rupees profit. But in these kind of scenario, aim for a 5 to 6 rupees profit. What is the big deal? The baseline is you will be in profits, you will be in greens. That is what matters at the end of the day. Okay, don't listen to the other guys who tell you that, boss, see, you have taken an entry at 1044, and if you would have stayed back, then you would have got a profit of around 30 rupees because it went up till 1074. Don't fall for those things, don't fall for such statements, because nobody can guarantee that just dial would have gone up till 1074. Only when time passes by, that is when we know that okay, just dial is moving up further. But at this point, at 10 o'clock in the morning, nobody in this world will tell you or can tell you that it will move up further. So you have to trade in the present time. Whatever is happening at 10 o'clock, that is the exact thing that you see on the chart, and that is depending on that particular thing, you take up the decision. Okay, so as I said, if you face such situations wherein a stock is completely going up or a stock is completely falling with red candles, reduce your target. That is the best thing that you can do to yourself as a day trader. Okay, so that is exactly what I did. I took an entry at 1044, that is somewhere here, and I took up or I booked my profit after 5 to 6 rupees, that is 1049.60. That is 5 rupees 60 paise. Let's wrap it up to 6 rupees. What's bad in that? For a 1000 rupees script, I booked a profit of 6 rupees. What is bad in that? There is nothing bad in that. According to me, it was a perfect trade. Okay, so please remember this point. Okay, so that was my thought process behind taking up the first trade in Just Dial. Okay, now getting on to the second trade. As I said, the second trade was a sell trade wherein I made a sell entry at 1049.10, and I booked out my profit at 1043.40. Again, this was again a 5 to 6 rupees profit. Okay, but I would request you guys to wait for some more days, because I will come up with a video that explains this particular trade. Okay, basically what I did here was a contrarian trading. Okay, so what is a contrarian trading? Contrarian trading is a style of trading wherein you go against the trend. Okay, so basically here Just Dial was in an absolute uptrend. But what did I do? I sold it, right? So I went against the trend. That is why it is known as a contrarian trade. Okay, so I would request you to wait for a few more days, because I think my next video will be on this particular topic, right? Like how to take up a trade if you see continuous green candles, or how to take up a trade if you see a particular skip falling down continuously. Okay, so let me not go ahead and explain it right here. I will explain it in my next video, but as of now, just be informed that the second trade that I took up in Just Dial was a contrarian trade, and it was absolutely depending on solid technicals. It was not a gamble. Okay, be sure on that. It was absolutely uh, based on solid and strong technicals, and it was a contrarian trade. Okay, so that was all about Just Dial, guys. I hope you're clear. Okay, now getting on to IGL. Now, the entry in IGL was at the 1045 candle, which is this candle, this green candle that you see here. Okay, now since the starting of the day, this guy also have been moving crazily in the upward direction. So what do we do as a day trader? As a day trader, you wait for the retracement till a support level. Okay, so you do not make an entry while it is going up. Don't you dare do that, or else you will be stuck. Okay, so let it move up till whatever point it wants to move up. Wait for it to retrace back. Wait for it to reach a support level, okay, or closer to a particular support level, depending on whatever technicals you follow. And then when you see that it is taking a support at that particular support level, and again it has started moving up, that is when you initiate your long trade. That is exactly what I did in IGL. Okay, it was going up continuously till 10:15, then it started falling. Okay, this was the retracement, and my long entry was at the 10:45 candle. Okay, but here is the twist. My entry went wrong. Why? Because I placed the market order. Okay, so when this was going down, I initiated my long entry because I saw that it is taking a support here, right? This is the support zone that we have. Okay, it was taking a support here. So I initiated a buy position here. My expectation was to enter the trade at around a price point of 578 or 579. But since I placed a market order, it actually executed my buy order at 580.25. So it was a slippage of 2 to 3 rupees. Okay, so for a 500 rupees script, if you get a slippage of 2 to 3 rupees, that is a matter of concern. Okay, but still I cannot help it because it has already executed my trade, okay, at 580.25. So as a day trader, what do? The first thing is I don't panic. Okay, never panic. That is the first thing that you do. Second thing that you do here is, in normal circumstances, when the retracement happens, okay, let's say you were able to catch the right move and your entry was initiated at 578 or 579. How much do you expect? How much target do you expect? A 4 to 5 rupees move, right? Because we are talking about a 500 rupees script, and 1% of 500 is 5 rupees, right? So we expect to book our profits somewhere around 582 or 583 if your entry would have been at 578. But in this case, our entry is not at 578. Our entry is at 580.25. Let's round it up to 580. Our entry is at 580. So again, the best thing that you can do to yourself as a day trader is reduce your target. Reduce it from 1% to 0.5%, and that is exactly what I did. I reduced my my target from 4 to 5 rupees to around 2.5 to 3 rupees. That is exactly what I did, right? So 580.25 was my entry, and I booked out my profit at 582.40, which is very close to 2.5 rupees. What is the big deal? Ultimately, I'm in greens, right? Ultimately, I am making 5 to 6% of my total capital, right? So what is the big deal? I am good. I am happy. I'm a happy trader. Okay, so you need to be flexible. That is the importance of being flexible as a day trader. You cannot be rigid on the fact that I will book my profit only when 1% is reached. Okay, no, that is not how you should be behaving. Okay, so please be flexible. Even if your entry is wrong, book out at 0.5% or 0.6%. Okay, nothing is gonna hurt here. Okay, that is point number one. Point number two that needs to be noted here, that is the thing which I just discussed was one of the reason why I booked out at 2.5 rupees. The second reason why I booked out at 2.5 rupees was because when a retracement happens, this is the retracement, right? And when it goes up, your target should be the day's high. This is the day's high. You can name it as a day's high or the recent swing high. Both are the same thing. Okay, in this chart. Okay, this point is the day's high and this point is also the recent swing high. Okay, so when the retracement happens and when you take the entry here, you should always aim for a target which is close to the recent swing high or to the day's high, because that will act as a resistance. Okay, now it is a completely different thing whether it breaks this resistance and goes up or not. That is a completely different discussion. Right now, the discussion is about your exit, about your right exit, how to exit a trade correctly. Okay, so if you take an entry at 578, aim for a 4 to 5 rupees move in the upward direction. And here you see that that 4 to 5 rupees is also matching the resistance level. So that becomes your perfect exit point. I hope you're getting the point, right? And here, as you can see here, this purple line, this is the resistance that you see here, and it was not able to breach the day's high and go up further. It fell. So ultimately, when you see the chart after the market is over, you will feel happy that you did the right thing. You will feel happy that you booked out your profit at around 0.6% or around 1% of the script price, and that you were not greedy, because ultimately it faced a resistance and it fell. Okay, I hope that point is clear. And again, after it fell, it again took a support at R3 and moved up again. The same thing happened with Just Dial. It came down, took the support here, flew up. Now, the problem with the traders, okay, the problem with the day traders is that they fail to wait from here to here. They fail to wait from here till here. They fail to wait from here till here. That is where your patience comes into picture. As I always say, you don't have to trade just for the sake of trading. You trade to earn money. You trade to maximize your capital. You trade to maximize your uh, money. So we are not here to trade just for the sake of trading. Okay, if you think that it will go up and you take a long position, that is not the right thing. You need to wait for the right point to be approached. In this case, it is retracing. So you need to wait for the right support levels. Once the price comes to that particular support level, and then when it moves up again, that is when you take the long entry. That makes your life much more easier. Please understand that. Patience is the key, guys. Okay, technicals are the keys. Patience is the key. Many more things are the keys. Okay, there is no single thing which you need to be an expertise in. When it comes to day trading, you need to be an expert in multiple things. As I said, patience is one of the thing. Waiting for a long time is one of the thing. Okay, not to be greedy is another thing. Selecting the right technicals which are strong enough is another thing. There are so many things. Okay, so let's not talk about it. Enough has been talked about it. So I don't want to give you any more gyan on that. I'm just warning you, or I would say, uh, trying to convey that always take up the right trades. Okay, don't anticipate or don't guess that okay, it has moved up, so it will breach the day's high and it will go up further. Okay, your thinking does not carry any importance in front of the market. Okay, so do whatever is right. Just do whatever the technicals are suggesting. As simple as that. Okay, so I hope it is clear, guys, and you got some more pointers as to how to handle yourself when you are day trading. Okay, I hope that will add some more cognizance to your learning curve. And if there is anything that I can help you with, then please feel free to go ahead and comment, asking any queries or questions that is bothering you. And I assure you that I will reply back to it. Okay, so that's all from my end, guys. I hope you all will stick back. You have a good day ahead, and let's see what the market has in stuff tomorrow. Okay, and if at all possible, then tomorrow also I'll go ahead and take up another whatever trades were being taken, I will go ahead and explain them as well. Okay, so you all take care of yourself and be safe, and all the best. Thank you so much. Bye bye.